What's up, everyone? Welcome to Real Wealth, your investing channel to help you make more money, help you keep more money, and then take that money and enjoy more life. What's up, Mikey? How's it going, man?
Going pretty good. We have a lot to talk about once again today, and a lot of the things we've been warning our viewers about and predicting are kind of coming true, and we want to go over them again so people can see what has happened.
Yeah, I love doing these things. It's kind of a quick recap for us as well. Like we talk about this stuff throughout the week, and by us going back, it kind of just reinforces these things. So we're going to go through charts. We're going to go through some of the Federal Reserve. I know they had a pretty important meeting this week and they announced some interesting things that will definitely affect the stock market and the crypto market. Stock market, again, we feel like we're on repeat here. All-time highs again. We're going to talk about the US dollar, and then we're going to pop into chatting about Bitcoin. MicroStrategy is a regular stock that we talk about on here. It's a Bitcoin proxy. And there's another proxy to Solana, which is one of our favorite cryptos we've been in as well, called GSOL. That's a stock that I actually just got in for the first time. So that's
Nice.
great. So let me just share my screen here real quick, and we'll go through kind of the market summary, where we're at with everything, and then we'll get into some other charts. You see my screen?
Yes, we can.
All right. So Bitcoin, crypto market cap are up to 2.6 trillion now. Down week for most crypto. So Bitcoin, even though it's up in the last day, in the last week, it was down 3.5%. Ethereum, which is the number two crypto, down 6.8%. Solana is one that we follow pretty closely, actually down pretty heavily to down 8.4%. So those are some of the big cryptos. Stock market, I know you're going to look lots of green here. You're going to share a little bit more around this. Nvidia plus 7%. Tesla finally in the green. That makes me happy because I own that. Google plus 6%. So that's stocks. Crypto, fear and greed. So this has started to creep back. So this is in line with, so this is the sentiment in the market. And this is in line with when things start to go down, people become less greedy. So this was probably in the mid 80s, maybe last week. So that's the fear and greed index. And then one of your favorite tools and one of my favorite tools is called Banter Bubbles. So again, lots of red in the charts. Phantom, I'm sure you're smiling, and our other buddy Mike also owns this one, up 27% in the week. And I've noticed over the last couple of days, some of the meme coins have started to move again as well. So here's Doge plus 17%, SHIB, Floki. These are all meme coins. TON, I think I heard this mentioned on a couple podcasts that we tune into as well. I think that I don't know if that's the Telegram one or a different one, but so that's kind of this. We use this tool to help us see what narratives are moving. So I see a couple gaming ones on here down a little bit. Beam, you and I both own that one. Gala has had like a strong run, definitely over the last couple weeks. Jupiter has had like massive gains. So Jupe and Uniswap. So these are basically decentralized exchanges. Jupiter is on Solana. I own this one, and Uniswap is on Ethereum. And I know you own this at some point. Do you still own this one?
I have a little bit, but I actually took profits a week and a half ago, and now
Nice.
everything's cheaper, and I'm going to buy back.
Yeah. Yeah. Okay. So that's some of the narratives that are going on right now. Bitcoin halving, less than 30 days. So we're getting close. So definitely like let's do a video next month and just we'll go into a little bit more detail around the Bitcoin halving, what it means, what happened in previous halvings, what patterns happened, what's likely to happen this time, and what's different this time. So there's definitely this time we're very much higher than we usually are in previous cycles. So this could get pretty interesting over the coming weeks. And we started to talk more about alt season as well. So altcoins are coins other than Bitcoin and the Ethereum, the two Goliaths. So we are not quite, based on this, not quite an altcoin season yet. And Bitcoin dominance is a good indicator of how close we are to alt season. So when more people are buying Bitcoin, usually they're buying less altcoins. And then when people are buying less Bitcoin, so this number starts to come down. So that means dominance is lower. So Bitcoin in relation to the overall market cap of all cryptos is 53%. So, a couple of weeks ago it was 55%. Over here it was, same 55%. But as this starts to creep down, like it did here, it creeps down, down, down. People are cycling out of here, maybe taking profits, selling, taking that money and putting it into altcoins. And when a bunch of money comes from Bitcoin into altcoins where market cap's lower, those run fast, which we've been seeing over the last couple of weeks and we've been talking about. So we're going to be talking about that more often as well. And then one last thing, Bitcoin ETFs. We've definitely been talking about this over the last couple months. Constant inflows into this. We're up to $11.52 billion now since this thing started. And we're up to 4.19% of total Bitcoin ownership is owned by the ETFs. And then Michael Saylor owns a bunch more. So the inflows have actually slowed a little bit. I mean, there's still inflows here, as you can see here. So the blue here on the bottom, these are outflows of a grayscale. So they're an ETF and people are selling out of grayscale because their fees are so high. And most people are just rolling them into BlackRock and some of the other ones. So inflows are slowing. They're not stopping. But this is one thing that we definitely want to keep an eye on, are inflows and outflows. So Mikey and I have been like extra bullish because there's been a lot of inflows into Bitcoin and other cryptos. And it's one thing that we monitor a lot. So that's the market. That's kind of the quick overview of where we're at. I'm going to stop sharing this. And I know Mikey probably has a couple things queued up. Did you want to share anything on kind of any of that stuff before you hop into the Federal Reserve?
Yeah, I mean, you went over a lot of good stuff there. I kind of like that we get a nice overview there. And I mean, every week we show people the Bitcoin halving clock. And,
Yeah,
it's like a countdown. And like when I'm looking at that, it's kind of like when I was a little kid and we had those little Christmas chocolate calendars. You open up a different door every day,
advent calendars. Yeah,
chocolate, right?
yeah,
It's kind of like we're going towards crypto Christmas right now.
yeah,
And the halving event, for people that aren't aware, is the Christmas for crypto investors. That's when we rub our hands together and we get kind of excited because, maybe after Christmas, you look forward to a new year ahead. And we're looking forward to a new cycle ahead for cryptos. So the stuff we've been talking about and teaching and pointing out is very, very important because not everyone follows crypto that closely. Some people still think it's stupid. They don't know what the cycle is. Even if they know it's every 4 years, they don't know that there's a couple of different 2-year patterns within
yeah.
that cycle. And we're trying to put that all together for everyone here.
Yeah, and I know your tagline is charts matter. Like it doesn't lie. Like you just get to see all this data on the chart. It happened and it's consistently happened in previous halving cycles. Is it guaranteed to happen again? No. Is it probable that it can happen again? More than likely. And there's other catalysts as well. That's why, we've been a wee bit extra bullish than, in the last, bunch of months. And we've had extra big grins on our face because it feels like we're just getting started. And I know you've mentioned this multiple times as well. And I've heard a bunch of other people say as well, we're in the third inning. Baseball games have 9 innings. So we're about a third way in this, and things have already run. Like, we'll bring up a chart later about Solana. Like that thing was not too long ago. It was like $10.
Yeah.
And then Mikey and I, like, we've been dollar cost averaging into this thing. And we have different strategies, Mikey and I, like different time frames for our investing. He's a little bit more shorter term, kind of in and out. He just sees things on charts and he plays things different. And then I buy and hold for a period. I get in and out here or there as well. But I just with Solana, I was buying. I think I bought my first batch on the last big massive downturn around 1850. And then again, same with you. We've been dollar cost averaging in. And what the heck did that thing hit like 2 or 3 days ago? That thing was
205.
205, right? And we're not going to get the bottoms, we're not going to get the tops. But by going through and talking about these things and sharing these things and seeing the analysis on the charts and listening to the podcasts, and it helps determine when a good entry point is and when a good exit point is. And we're going to do another video shortly about like exit strategies. Just because we're talking about them doesn't mean we're ready to exit, but you need a plan and you need some sort of strategy, because you can easily get wrecked here. It's good to have the excitement and the euphoria on the upswing. Everyone can make money, but the really good and experienced people know when to get out. So
Yeah, I mean, just to say one other thing too, like you mentioned, is it a guarantee that we're going to make money on these cryptos and they're going to do what we say? It's not a guarantee. And is there a chance it might not work? There is a chance it might not work, but I don't want people to get the wrong idea here that it's like 50-50 or anything. It's not.
right.
For me, it's 90 some percent certainty that we're going to make a lot of money here. And that might sound overconfident, but I said the same thing at the beginning of 2020. I knew the cycles, I knew what was coming. And then COVID happened and they printed $2 trillion and gave us all-time low rates. And I was like, holy crap. Now I'm like 98% sure we're going to have a big rally. And I
Yeah,
said this when cryptos were like $8,000 Bitcoin and it went to 68,000. Like I
wow.
had 90 something percent confidence that it would go up a lot. And
Yeah,
when I did my training courses in 2020, that's what I taught people, and it came true. And now I'm about to do training courses again in April and May here, and I'm going to
yeah,
be laying down all of the groundwork for people because I feel the same way I did in
yeah,
2020, but for different reasons. But I
yeah,
am so sure it's going to go higher. It's kind of like me and Mike have done student rentals. Okay. Now, some people think student rentals are stupid and risky. Okay. And they could be if you don't do them properly. But if you buy a
yeah,
good location and you renovate it properly and you start showing it to students early enough, it's going to be full and rented. I mean, I guess you could say there's a chance you won't rent it, but I don't really agree with that. I mean, I have to have like a hurricane take my house out. Like,
yeah,
I'm going to rent it. And
yeah.
with cryptos, I guess it could be World War III or some weird thing that happens. Larry Fink starts hating Bitcoin, something weird, but I'm not expecting that.
Right. And I'm sure
So,
you get messages from people as well that, oh, crypto's gambling, crypto's a scam. Well, first off, crypto's been here for a while, and this isn't just some like new thing. Second, and as if you've been tuning in often, like we study patterns and cycles, and we talk about kind of the green check marks, right? Certain things line up, and the more of those green check marks there are, Mikey goes from 90% certain, and me, to 95% certain. We had another green check mark, gets to 98%. We'll never get to 100% certain, and if anyone tells you that they can, they're wrong, because anything can happen at any time. So
yeah.
you just need to be mindful of that, and you don't put all your eggs in one basket. And things do happen, and events in the world do happen that affect this. Even so, we're going to pop into the next topic here of the Federal Reserve. This guy can say one word or this word, and it affects things. Now, before we hop into that, I just want to remind people, like, share, subscribe. It helps you see more content like this, the more that you interact with this. And if you got value from it, just give it a share with other people. We'd appreciate it. And if you had any questions or comments, just put them in the comments below. And one last reminder, disclaimer, we're just two dudes on the internet sharing our opinion. What we share here, it's not financial advice. We've been at it for a bit. We have some experience, but take in a lot of information from everywhere, and then you're going to be making your own decision. Cool? Cool. Okay, Federal Reserve rate decision. So our friends over at who does these meetings? Who hosts them?
Well, the main guy we're looking at is Jerome Powell. He's the Federal Reserve chairman. And, there's certain people that we listen to when they speak, whether it's Joe Biden or whether it's Jerome Powell or whether it's a few other people. So that's really what everyone's watching. He's the puppet master with all the strings, raising or lowering interest rates. And that's really what we're watching right now. So they spoke again this week, and when they speak, the market listens. So, they basically had to make a decision this week on whether they would be hiking interest rates or not, Mike. And everyone looks forward to that. And we're going to give you a market update now here with Real Wealth. And when we're looking at this stuff here, you'll see that the S&P was trading flat, waiting for the rate decision. And it was kind of just hanging out sideways, literally waiting to see, are they going to hike rates or are they not? Are they going to say something doom and gloom, or are they going to be neutral? And that's basically what we were looking for this past week. So you'll see here the Federal Reserve held the rate steady, still says they're going to cut rates 3 times at some point this year. So nothing happened. They said the same thing again, and no news is good news. And that's what ended up happening. Now, I was pointing this out to a friend of mine here. I was having lunch with him the other day, and I said to him, I go, Jerome Powell keeps pretending that we're still fighting inflation and it's a tough battle ahead. That's a bunch of crap to me, because inflation used to be 9%. Right now it's around 3%. That's normal. Okay, that is absolutely normal. So, they've really brought inflation down, and they've really done what they said they were going to do. So when you listen to them saying we're going to do 3 rate cuts this year, let's think about that logically. Okay, so I've been telling people we're probably going to do rate cuts some point in the summer of 2024 and possibly late spring. I've been saying that since last year for 2 reasons. Number one, we have an election coming up. You have to start really getting the public in America happy and positive, especially if they want to vote for Joe Biden again. So I think that's what's going to happen. The Federal Reserve is supposed to be independent and not interact with the government. That's a bunch of crap. They totally work together. They're totally talking to each other.
Come on, that doesn't happen.
Yeah, they're doing that. Like, let's just accept that that's the way it works. Like, it's like when you're a boxer, okay? If you don't beat the champion and knock him out onto the canvas and you leave it up to the judges are going to give the victory to the champion. That's not the way it's supposed to be. It's supposed to be independent. They're going to give Tyson Fury the victory. That's just the way it's going to go, right? Yeah. So that's the way this goes here. The Federal Reserve is going to try to keep Joe Biden in power. That's my opinion. I can't prove it, but that's my opinion. Yeah. So, that's what's going to happen. Now, second to that, they're saying they're going to do 3 rate cuts. And, then when they're on camera, they're saying, we're not going to cut rates anytime soon, maybe some point later this year. That's a bunch of crap. If you're going to lower the rates 3 times, you can't start in November, guys. Like, they're not going to just lower November and December, all of a sudden 3 rate cuts. They're going to start in like June or May, and they're going to take, their time doing the rate cuts. So I really think this summer, at some point, probably May, June, or July, they're going to announce the rate cuts, and they're going to start, and then maybe they'll do another one in September or October, and another one in November or December. That's the way it's probably going to go, and it's going to coincide with the elections coming. So, let's rub our hands together and look forward to that. Like, we're going to have Bitcoin halving cycle coming up. We're going to have rate cuts announced. That's just the announcement. Then we're going to have three rate cuts. That's already five catalysts. Then they might print more money. That's six catalysts. Then maybe a bunch of billionaires are going to keep buying through the ETFs.
These are the
Then
green check marks. The green
Elon
check
Musk might
marks.
buy more. Apple might start selling it and buying it. Like there's all
Yeah.
these things that can happen here that are going to build a bull case for Bitcoin in my mind. And although they haven't happened yet, and you might say you don't know they're coming, I made the same bull case in 2020. And what happened? Elon Musk started buying. Tim Cook from Apple said he was buying. All Ray Dalio said he was buying. Tom
Yeah.
Brady was advertising it. Like it's coming.
Yeah.
And now we have Larry Fink involved, and that's where we're looking. So, let's maintain our not just our bullishness in a blind fashion, but in a realistic fashion. So they're
Yeah,
not
one
raising
sec, one
rates.
sec. Let me hop in here. And those big guys already have Bitcoin on their balance sheet. That's one thing. And then also the ETFs, that was another one of the big catalysts, which is a big major green check mark that have already been approved. So these have been in
Yeah, since
circulation for a
January.
while. But now there's also announcements of other countries that could potentially have their own ETF, like big money from across the water, right?
China.
Yes, right. So yeah, the US, we get the green check mark that we're able to buy it, but this just means even more demand. And then when the Bitcoin halving comes up, we already have a lot of demand. Then all these other ETFs from other countries multiply that demand more. Then the supply gets chopped in half in the, less than 30 days with the Bitcoin
Yep.
halving. So it's even less supply with like maximum demand, which is it's gonna be a wild ride. It should be anyway. Well, it already is, and we'll get to it later when you bring up some of the kind of the crypto charts and like the insane bouncing up and down, which is kind of par for the course with crypto. But before we get into that, stock market, what's up? Again, it feels like we're on repeat here, but this thing just keeps running.
Yeah, so I mean, we want to keep ourselves on track and make sure we know where we're at here. So I mean, when the Federal Reserve spoke, we essentially ended up having the stock market do well. So it made another new all-time high. It went above 5,200 for the S&P. A couple weeks ago, we were talking about it went over 5,000 for the first time ever, and it just keeps going up now, right?
Now,
So
can you see it on the chart, like where it's static, they're waiting for the announcement, then the announcement hits, and then like do we see a spike? I know in crypto, like it's more obvious because it moves
yeah,
more.
I'm able to see it on the charts. I was pointing this out to my followers and to you all week leading up to the announcement. I mean, you could see here we closed even a little bit higher there the other day again. So if we go to the S&P chart, if you look really closely here, guys, you'll see that we just bounced up and down right here in this range. And
Yeah,
then when the Federal Reserve spoke, we popped up right there. Okay,
yeah.
so as soon as they spoke and said we're not raising rates and we're still cutting three times, we ended up seeing that the Federal Reserve comments led to us popping above the red resistance level here after we were trapped underneath it, waiting for the Fed to speak. So you could literally see it on the charts. And now we have two little red candles. And although they are the color red, you'll see that they're actually above this new green candle and they're maintaining themselves very bullishly. So that's a pretty darn bullish setup overall.
Mhm.
And you'll notice on your chart, it's just zigzagging higher. You see how
Yeah.
it's just
And that
zigzagging?
dotted line there is basically an uptrend from prior to what's on this chart. So as you can see, it continually stays above it. Sometimes it bounces off it. Sometimes that might be a signal to buy when it hits the lower end of that dotted line.
Yeah,
Yeah.
yeah. So, I mean, if I zoom out a little more here, you'll see
Oh, yeah.
we've been in a hell of a bull rally since late October with stocks and cryptos. Why? Because, inflation stayed pretty darn low and they basically promised us multiple rate cuts for 2024. So when the market hears that, they price that in and they say to themselves, if they're going to start cutting rates, that means more money will be lent to people and the prices of things will go up and we'll get a little more inflation. And that might not be good for a retiree or a low income person, but investors like it, and they are bidding the prices of things up in advance, and that's how markets work. They
Yeah.
price it in right now. They don't wait for it to happen. They price it in right now.
And also remember, not only do we have to pay higher interest rates on our mortgage, on our lines of credit and everything, the government has a lot of debt. And we talk about this often. There's massive implications to having a lot of government debt. When you have debt, you owe someone. And when that interest rate is high, you owe them a lot more. And they're feeling the pinch as well. Fortunately or unfortunately for them, they have an unlimited um, wallet where they can just add more money. We don't have that luxury. If the interest rates are so high for so long and we have a lot of debt personally, we can only sustain ourselves for so long. But I just wanted to share that the government owes a lot of money, and every day, every week, every month, every decade, it's just a massive upswing that is owed, and a good amount of the revenue that they get from taxpayers actually goes towards paying interest on their loans, which it sucks, but it is what it is. And I just wanted you guys to have a little bit better of an understanding that, because it all ties into inflation and interest rates and debt, and what does that do to the S&P for stocks? What does that do to cryptos? So it's very important to understand these things. I can't control how much the government's going to borrow, but I can understand what they're doing and the implications of what they're doing, so I can front run what is about to happen. And we've seen this on the
Exactly.
charts before.
Exactly. Yeah. Now I'm
Cool.
gonna jump into something else here. I told Mike, I go,
Ooh,
I'm gonna do
bonus.
I'm going to do a focus on the US dollar index right now to wrap up what we just talked about. And it's something that a lot of people won't be too familiar with, but if you've been following my content for the past bunch of years, it's something I focus on. So markets are higher. Nvidia is making new announcements about AI chips. Nvidia went even higher again, right? And we have this little image here I posted last week. The US economy is being propped up by Nvidia and Taylor Swift, and you'll see this deck that someone built, and they
Oh,
didn't
yeah.
build it very well. It's just supported by these two pieces of wood called Nvidia and Taylor Swift. Like, that's how a lot of people feel about the market. It's just overvalued, and there's not enough support to keep the economy up. And it's kind of a funny little image there, but like Taylor Swift starts dating a football player. We've never had so many people watch the Super Bowl in our lives. But if she stops dating that guy, maybe they won't watch the Super Bowl next year, right? And if
Right.
Nvidia stops selling so many chips, maybe they'll drop and the markets will drop. So that's how a lot of people feel right now. And we see the Federal Reserve having the 34, 35 trillion dollar debt that we've
Yes.
been talking about from last week. And that's true, right? That's a very true thing. But what about the US dollar? How does all of that debt affect the US dollar? Okay, so this is called the DXY. The ticker symbol on your stock market chart is DXY. And if you zoom in short term, like it'll only show you 2 or 3 months. And Mike, I mean, if you're looking at it short term, it looks like, wow, it's going up in value, right? The US
Yeah.
dollar is pretty strong if you're zooming in short term. But if you zoom out, this thing has been actually dropping a lot. Okay. So let's do a little chart analysis here. Okay. So you'll see that the value was around 115 here at the top. Okay. So it used to be way up here at about 115 when they were actively hiking rates and still scaring people about inflation. Now, in late 2022, which is where I just drew my X, it peaked because we started reporting 3 or 4% inflation, and they started barely hiking rates. It was not a 1% hike. It was not a 0.5% hike. It was quarter point hikes and then eventually 0% hikes. And what did it do once that happened? It dropped in value all the way down to around 100. That's a big deal. It dropped by, like, I don't know, 13 or whatever, 14%, whatever that is in
Yeah.
value. That's why the markets are going up, in my opinion. When you devalue the US dollar by 10 or 15%, you're going to see the market go up that much or more because it's not just dollar devaluation. Nvidia's doing well, Costco's doing well, Walmart's doing well, on top of the fact they're devaluing the dollars. So if my dollar is worth less, I have to give you more of my crappy dollars to buy things. And that's why your bricks of cheese are getting smaller and your steaks are getting more expensive and all this stuff too, because you have to give up more of your crappy Canadian or American dollars to
How about
buy.
your tacos? Are they getting any more
They're pretty
expensive?
cheap still. They're actually still pretty cheap.
Mikey's in
But
Mexico and he always sends me pictures of tacos, and I visited him last month, and unbelievable. Best tacos ever, and it barely costed a couple bucks a taco.
so I'm doing well. I'm beating inflation my own way here. So if you go from the top where it was 115, the dollar index, and where it dropped to, you see we've dropped between 13 and 14% in total on the dollar index from the high to the low point. Okay. And I want to do a little bit of chart analysis here now. So if you look closely, Mike, you know how I like to look at this stuff in terms of support and resistance. Okay. So
Yeah.
we have kind of an upper boundary here, and we have kind of a lower boundary here, which I just drew in red.
Yep.
Okay. Now, although you might say, yeah, but Mike, we went above it here. Yeah, you did, but then it just barely hung on and it dropped right back into my range. And when it went below here, I went right back up into my range. So this range is what we're watching. And currently, I'm sure Mike can see this, we're still in this range here and we're still bouncing like a pinball. Boom, 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 boom.
And
We're
it's
just
been in that
bouncing.
range for a while. Like if you look on the chart, that's almost the beginning of the 2023. So that's
Yeah.
more than a year.
Now, why is that? Okay, so if again, let's do some chart analysis here. I'm good at making a clear picture out of something that might be confusing to people. Okay, that's my specialty. So why was it rallying so hard in 2022? Because they kept raising interest rates and not printing money, which strengthens your dollar. Okay, now you have to give less of those dollars to buy things, meaning not everything, but less dollars to buy stocks, less dollars to buy cryptos, less dollars to buy a home, even though your groceries are still expensive. You had to give less of those strong dollars now to buy many things. Now it dropped because we were beating inflation and they started talking about not raising rates anymore and cutting them. So now the dollar gets devalued. Now we're going sideways. And what we're asking ourselves is, when are we going to cut rates? And when they cut rates, will break down and drop in value again. If they cancel the rate cuts, maybe they raise rates again, the dollar might strengthen and break up out of that sideways range. So
Yeah.
right now, this sideways range is saying, are we going to cancel the rate cuts and raise interest rates? Or are we going to do those darn rate cuts and drop the value of the dollar?
Yeah.
That's the picture we're looking at right now if you're an investor.
So, and this just shows patterns and understanding the hints that we get along the way. Investing is kind of like breadcrumbs or a puzzle. You get all these puzzle pieces and it's not clear what the picture is. But the more of these like little indicators, the more that, Mikey pops into these charts, the more the puzzle becomes a little bit more clear. And the more clear you see something, the more confidence you have, the more conviction you have in your trades. Like Mikey mentioned earlier, like during, one of the last cycles, he was like 98% certain that things would go in the direction that he thought. So this is where it's important to either actually tune into a lot of the things that we listen to or tune into our channel and we do a summary of this stuff. Like Mikey listened to the meeting from the Fed where they hinted at things. So the words that they use, and like after the meeting, they're like, was the Fed dovish or were they hawkish? So dovish means they're probably about to change their tune soon. They're going to probably ease up on things, meaning they're not going to raise anymore. They've been static for a while, holding rates, and they're probably, they give you little hints in there, and sometimes you need to work towards interpreting it, and then sometimes, we tune into other podcasts and various things to help us interpret things as well. And then we bring it all together, and then Mikey and I, we chat. We're like, okay, they said this, what do you think of this? All right, we got 8 check marks that are lining up here. Okay, I'm going to take, maybe I'm going to take a 20% entry into this one. And then when, the 9th check mark and the 10th check mark line up, I'm like, okay, I'm going to maybe add 60% to my position. So that's kind of how we go about doing things. So it was cool to see you put that together on the chart and put the pieces together, and the picture just becomes a little bit more clear, and it helps us determine our next plan of action. So
And I'm gonna show you guys one more thing just to wrap up what I just showed you. So, you can follow this stuff. This is the DXY chart, the US dollar index again. Okay. Now, here's what I'm showing you on the screen here. Okay. When we had a panic, which was COVID, this was COVID right here. Okay. Look how the US dollar shot up all of a sudden.
Oh, yeah.
Right. So during times of panic, everyone sells their stocks and the dollar becomes a very valuable and sought after asset, and it goes up in value. Okay.
Yeah.
Then look how much it dropped here in value. Why did that happen? Right. The reason why it happened is because they lowered interest rates massively and they printed $2 trillion twice. Okay. So what do all-time low interest rates and lots of money printing do? When your GDP is not even doing very well, you devalue the dollar, and that's why it dropped so much. So do you see now why, folks, people are bullish on the coming few years? Because we're expecting them to lower rates very meaningfully, and they're going to print money at some point. Like, they've raised the debt by almost 15% during the rate hikes, which is stupid. Okay, but
Yeah.
they're going to keep printing money, whether it's to fund wars, whether it's to fund the government, or
Yeah.
whether it's to juice the economy and make the voters happy.
Yeah.
And
And I
you see,
encourage you guys to go back and listen to the last 15 minutes of this. I didn't fully understand, and I still don't fully understand it, but I'm in a much better position than I was before. I didn't really understand the correlation between higher interest rates and inflation and devaluation of the dollar and all of those things. But now things are a little bit more clear to me. I kind of need to hear it a couple of times, and sometimes it's said in a certain way, like, the way Mikey kind of shows it on the charts, and he shows, okay, well, this happened here, here's why it happened, and when that happened, this happened. So that stuff is all super helpful. So it's very important to understand your government owes a lot of money. And if you're listening to the repeat of this, you're listening to this tomorrow, they're going to owe a lot more money, even in the time frame of that little window. It's just constant, right? And they have to pay the debt that they have to pay the interest on the debt that they owe. And they don't have a lot of money to pay for all of that, but it still needs to get paid. So they go get another credit card to pay off their other credit card. They're allowed to do that. So just be mindful of when they print money, it's just a constant cycle. More debt, they have to pay more interest, they have to pay the interest somehow. So they need more money to do that. And the money comes from, they print more money, they add more money to the system, which means there's more money, which means you always use the analogy of the Michael Jordan rookie cards. When there's more of something, it just means that they're valued less, which means you have to spend more money to get the same pound of bacon or the brick of cheese. So super, super important to get this. And then all of that has an impact on stocks and has an impact on cryptos a lot. And we can see that from the charts. So speaking of charts, you mentioned your course. I just want to bring it up again. We've been mentioning this over the last couple of weeks. Mikey's hosting an online course coming up. So just bring up the details on the dates. And we're also going to be in Mexico. Me and Mikey will be in Mexico. We're going to be sharing. Mikey's going to go through all this stuff live with the charts. And yeah, it's going to be wild. I'm really looking forward to it. So
I'm doing this on purpose, folks. Like, I held back doing the training course last year because everyone was scared of the markets and confused, and you just got punished with your crypto account and your stocks and everything. And I just kind of waited until people started believing in things again, which is right now. And I still think we're only in the third inning of this crypto run specifically, and
Yeah.
probably the stock run as well over the next few years. So
Yeah.
I'm doing it on purpose in timing to prepare everyone for what's coming. If you go to investlikemike.com and you click on the store at the top there, you'll see there's an online training course for April 6th weekend, and there's a Mexico training course coming up for May 4th weekend. And either one of them, you're going to get the same content. If you come to Mexico, you're going to have personal access to me and Mike in person as well, which will be cool. And you got exposed to a little bit of the real estate stuff we're doing. And
And we're gonna
I'm
have some
gonna
fun.
I know a lot of people say this, but I'm literally going to make this my best course yet, because I'm going to be preparing people for what's coming. In 2022, at the beginning of the year, I warned people I was going all cash, and it worked out well for us. In last year, especially October of last year, me and Mike were saying we're buying the hell out of Bitcoin. We're buying all these other cryptos. And now, some of my accounts are up 400, 500% since then. I want to share this stuff with people, prepare them from what's coming, and be able to allow them to profit from it, just
Yeah.
like I did in 2020 when I was teaching people. It made me very proud to help other people make more profits that they can spend on their family and their retirement. And that's what we're going to do.
Yeah, and part of the reason for us doing the channel, like our channel is called Real Wealth, and our tagline is live life well. When you have more money, it gives you more freedom and flexibility to enjoy other things, enjoy more tacos, enjoy more time with your kids, enjoy travel, whatever it is to you, enjoy giving to causes that you support. So, as Mikey's mentioned multiple times, third inning out of 9 innings. So we're about a third of the way in, give or take. So you're going to want to try to accelerate your learning, or at least kind of piggyback on the learnings and trainings of other people that have been through a couple cycles and get this stuff more, because there are a lot of green check marks that are lining up here that lead us to believe that we're going to be significantly higher in the next 12 to 18 months. So me and Mikey, we've been doubling down on this stuff for a while now, learning and sharing the best we can. We've been through a lot of trainings and frustrations, and even before we hit record, Mikey was sharing, oh man, these decentralized exchanges, like I don't like them. I just don't like doing them. And like I'm experienced over there, and it's second nature to me because I've been through it. I put a lot of time into learning that. And there's pros and cons of doing different things in different areas. So, yeah, I just wanted to share that before we continued on. So are you cool to hop into some Bitcoin now? So Bitcoin's been bouncing around a good amount over the last couple weeks. We're still in an uptrend, but we've been having massive record-breaking red candle days. And red candle means down. Green means good. Red usually means bad. But if you zoom out, overall, we're still in an uptrend. So what do you got for us?
Yeah, so I mean, this is going to be one of the most important parts of our video today. And, it's kind of funny when, if people are holding maybe shares of Microsoft or Apple, they don't really care when it drops. They've maybe owned it for years and they're already up a lot. But if you're looking at Bitcoin and you're a newer investor and you didn't get in cheap, you only want it to go up. And if it ever goes down, oh my God, it's the worst investment ever. It's so risky. And I think that's the wrong way to look at it. And it's human emotions when you have something that you don't understand or trust yet. Okay. And that's really what it is. So I'm going to share the screen here, try to
Yeah.
make you more comfortable with the Bitcoin chart. So this is the current Bitcoin chart here. You'll see we've had quite a rally since the ETF announcement came into play. And you'll see here that from late February onwards,
Wow.
it went up a lot. Okay. And we were talking about how it went up about 90 or more percent there.
And
And
we
now,
talked about what we thought the implication of a Bitcoin ETF would do.
for
Yes,
sure.
it went down for a bit right when the ETF came out, but look at that up arrow.
Yeah, and it went up about 90 or more percent here if we measure it. It was, oh, I'm sorry, that's only
Yeah.
part of the rally. But after the ETFs were announced, it went up quite a bit. And, when we're looking at this here, let me just get rid of my two drawings there. Let's zoom out a little more here. There we go. So the ETFs came out in January, and we ended up having a drop over here, folks, right after the announcement. And the rally afterwards was over 90% right there.
And that was a pretty sizable drop there. I didn't own Bitcoin, but I owned MicroStrategy, which we'll talk about as well, which was a proxy. It went down a ton, and I still had all of mine. And I was actually adding to my position because I still believe things were still going to go up here because of inflows. So he's circling there. 90% it went up from January 25th-ish to now. So this is where it's very important, people, to look at the chart, understand the type of trader you are. If you're a short-term trader, then maybe you're looking at a daily chart and you're like, oh, wow, it went down 10%. But if you're a medium-term trader like me, like I'm not in and out every day. I'm more of a longer term. So don't just look at the day. You have to zoom out what Mikey did. Like, remember, it just went up 90%. This thing it doesn't go up forever. There are days where it'll go up 22% and then it'll go down 18%. But drawing these dotted lines that Mikey does on here and showing the long-term trend, as long as we're still above that trend line, we're bullish.
And another thing to point out too here, Mike, I mean, I'm just pointing out that the drop from the peak until now, we
Yeah.
went down about 17 or 18%. But that's
Yeah.
after we almost doubled. We went up 91% and
Right.
then we dropped 17. That's normal.
But it
Okay.
does hurt for the new people getting in at the top there initially.
Exactly.
So the challenge here
Exactly.
is like if you're getting out then and you're trying to play these tops and dips and you're new and you're getting in at the top and then you're selling and then everyone else is selling and then you locked in your losses and then it goes up, that does damage to you psychologically. And then that'll prevent you
Yeah.
from wanting to get back into this because it's like all I do is buy at the top and I sell at the bottom and I can't time this thing right.
Well, and that's why I want to train people with my course to teach people how I think so that I can help, get rid of those bad habits that people have. And I don't know if you remember this, Mike, but over here, a week or two ago when we did our video, I predicted a Bitcoin drop. Okay. And I referenced that after the
Wow.
ETF, we dropped a little over 20% after
Yeah.
the ETF,
Yeah.
right? Well, when I predicted a drop recently, I said we'll probably drop another 15 or 20%. And we
Yeah.
dropped 17 or 18%,
Yeah.
exactly like we thought. Okay. And, just to point out again on the chart, and this is not to brag, it's just to inform you that we have a pretty good track record here with real wealth. I predicted the Bitcoin would drop right there on that red candle. Okay.
Yeah.
And, I actually have a bunch of cash in my cryptos and my stock options account because of that.
Yeah.
And then it dropped a bunch. And now
Yeah.
we're taking advantage of a discount. So,
Yeah.
you know,
Well,
part
Mikey's able to make money on these short-term bounces because he's here every day and he sees it. He's made a ton on MicroStrategy options. He's made a ton on Coinbase options because he's able to monitor it. But just it doesn't have to be complicated. You don't have to get in and out. Like Mikey mentioned to me, he's like, bro, like I see this on the chart. I have a feeling this is going to happen. Um,
yeah.
I didn't sell. I didn't sell based on that because I had a feeling we're not going to go down 50%. I had a good idea. We'll probably do our normal pullbacks of 20, 25%, but we're still in the uptrend and we believe we're in the third inning. So if we're in the third inning, if I just held, I'm cool. I bought Solana for 1850. I bought along the way. Now I mean, it's 170 now, but it got up over 200, right? So had you just held the whole time, and what is it? Time in the market is better than timing the market, right? So just understand the type of trader you are. Are you an investor? You're a trader. How much time do you have to devote to these things? And Mikey will go through these tools on these trainings so you can do these things on your own, but also know that after the training, you're not alone. Like we hold your hand after that as well. Like we have sessions, weekly sessions where we help ingrain the learnings, and you have us holding your hand through the process initially. I've taken Mikey's course. I got a ton out of the course. And by being immersed in this stuff often, it helps to solidify it. I'm not a technical analysis expert. I knew technical analysis back in the day. I enjoy it, but now I get to see things on the chart. You know, Mikey's like, oh, we see an inverted head and shoulders here. I'm like, oh, bro, there it is. Woo! Right. And he's drawing on the chart and he's like, oh, if we cross this line and we come back and retest, there's a good chance we'll do this. Sure enough, like the shit's happening. He's like, oh, we're getting close. Pay attention. So it's wild shit to actually see the stuff kind of come about. And you just think, oh, what's he doing? He's just drawing lines on a chart. How does he know? How does he know where it does this and it crossed this line? And how do you know? Like, so it's interesting anyway. So the more you're in it, the more, yeah, go ahead.
The big thing is too, like, I'm wearing a guitar shirt here. I've got a guitar behind me. If you can't read the sheet music, you're not going to be able to understand the song that well, right? You're not going to be able to separate the notes on the guitar and the chords on the guitar.
Yeah,
But if I teach you the language on how to read sheet music or a
yeah,
guitar tab, you're going to be able to get a lot of information out of that. And when
yeah,
I want to teach you how I play a certain song on the guitar, you're going to be able to play that song now. Okay.
yeah,
And with the charts, it's the same thing. Like if you're taking the training with us, when you're done and we're doing these weekly videos with Mike and I'm posting charts in my group, you're going to get a lot more out of that. And you're not going to be as scared or emotional when there is a dip because you'll
right.
probably understand what's happening better. And that's what we want to do together. So even right now, I'm going to show you something else. Mike just mentioned a chart pattern that I like, an inverted head and shoulders pattern.
Yeah.
So I'm going to go from a daily chart to a 1 hour chart. So now each of the candles on your screen represent 1 hour of time. Before, each candle represented one day. Now, if this is overwhelming for you,
Oh, there it is. I
if
see
this
it.
is overwhelming for you guys, don't worry about it, but just take it as food for thought here. So when a market goes up for a long time like this and it goes into a big dip like we just had, okay, there's a
Yeah.
few different things I look for as a check mark to say to myself, I think we're turning around to the upside again. Okay. So let's show you a couple of them here. And again, this might overwhelm some people, but it is what it is. Just take it as food for thought here. So I always talk about my Elliott wave patterns. Well, 1, 2, 3, 4, 5. Okay, we have a 5 wave Elliott wave pattern to the downside. Normally, when that happens and all 5 have already happened, that's a check mark to say we're going to probably bottom soon. Okay. Also, I showed you that the last Bitcoin dip was about 20%. Well, we've fallen about 18%. That's another check mark that we're
Yeah.
probably coming towards the end of this dip. Now, what's the next thing I want to look for as a check mark? A bottoming pattern, which visually tells me investors want to turn this thing around. So now I'm going to show you the bottoming pattern. Okay. Now, the same way that if you look at a bunch of music notes on sheet music, it might look like Chinese to you, kind of a thing. This might look like a bunch of zigzags on your screen, and you don't know what the hell is going on, right? But I'm very good at dissecting this stuff. So I've been
Mikey's
showing,
brain sees something different here.
I
Yeah.
see all the
Here we
X's and
go.
zeros like the matrix here. Okay, so I look at this and I immediately see a left shoulder,
Yeah.
a head,
Head. Yeah.
and then I've been warning people that this was the first half of the right shoulder. And I was warning about that over here, folks. I was warning about that publicly in my group on Thursday and Friday. I would publicly warned on Thursday and Friday that I said, I think we're going to form the other half of the right shoulder. Now look what we've done this weekend. We've already started forming the rest of the right shoulder, and it might continue to form the rest of the right shoulder here.
Yeah.
And,
Draw
if
that
that
line.
happens,
Yep. 69,000.
then we have what's called a neckline resistance. And if we break above that, I think we're off to the races, folks. I think Larry Fink and Michael Saylor and everyone else is going to keep buying their
And
Bitcoin.
Mike Iliano
And
and Mike Gillespie. Yeah.
all the
All the
mics
Mikes. Mike
are
Sheffer,
going to
if
be
you're
buying
listening.
here. So, again, it's not that easy to pick these out, but I teach people how I do it. And once I go into great detail showing you what they're all about, you're going to understand my posts better. And I think we have an upside down head and shoulders pattern. There's your left shoulder, there's your right shoulder, and this is the head.
And
Okay.
you don't have to find these on your own right away. We teach you about these, then we're there holding your hand. Mikey posts these in our group. Hey,
Yeah,
this is what I'm seeing. And then you can go on the chart and see it yourself. And then eventually over time, you'll just see it yourself.
exactly. Or when I show it to you, you'll have a deep understanding of it.
Yeah.
So,
And
you
what it
know,
means.
here's another thing too. I teach this as well, and I'm going to very briefly talk about this. But the previous all-time high was 68,000. So we rallied after the ETFs. We went to 73,000. And when you break out above an all-time high, I was warning people here. I said Bitcoin's probably going to drop. I see something on the chart.
Yeah.
Okay. And on top of seeing something on the chart, when you break above an all-time high, you usually drop to retest that breakout to make sure it's the real deal. That's what we did here. We went below 68,000
And
to
he
break
saw a
out.
hint at the top. There's that
Yeah,
engulfing candle that the red candle engulfed the green candle. And I know this seems all kind of weird and hokey, and this stuff works.
it
There's no
works.
guarantees that any one indicator will work. But as Mikey said, the more of them that line up, the more
Yeah.
conviction we have with our buying. So instead of buying 10% of our portfolio, when we're getting 8 check marks lining up, we're tossing in, 60 or 70%. We're taking ourselves out of cash. We're putting ourselves in because there's more likelihood that it will go up.
So when it went to an all-time high, I said we're probably going to drop and retest the breakout. Then I saw a signal saying we might drop, and we did.
That's
Okay.
the timing. Yeah.
So that's the benefit of learning from me and following along with us here. Now, recently, right here
Yeah.
on Thursday or Friday, I made another prediction. I said, look, now we have an
Flip
engulfing
side.
green candle.
Yeah.
Okay, this green candle is swallowing the red candle like a Pac-Man video game. So first I saw an engulfing candle that was red and bad. Now I see an engulfing candle that's green and good.
So
So
this is
I
a hint that we might be at the bottom of this downturn.
And so now we have an engulfing green candle. We have an inverse head and shoulders pattern that means we're bottoming. And I think we're about to break out again.
Check
And,
marks.
there's a bunch of green check marks now in place here. And MicroStrategy and Larry Fink and everyone's going to buy. The Fed is saying they're going to lower rates 3 times still. I think we're about to turn around, and I'm saying it in advance of the move. And let's see, next week when me and Mike talk to you again, we're going to point this out to you and we're
Yeah.
going to talk about it. And I want to point out another thing. We are moving in like a sideways kind of a range right now. We're kind of stuck in this range, and I think we're going to break up out of it. So keep following along with us. If this stuff confused you, because I just threw a lot of information at you, that's
Yeah.
why I train people in the course. And that's why I try to clarify it, just like trying to play a song on my guitar. If you can't play the guitar, I can teach you because I know all of the basics and more. So that's
Yeah.
what we're going to try to do. Okay.
And you got to practice it. You just have to see it often. And, by us at least kind of pointing it out, you don't have to see it yourself right away. Like we do that work for you. But
Yeah.
eventually, like we want to help you do this on your own as well. So you don't, always have to kind of rely on the group. You'll be able to see it yourself fast. So, and we'll be there to answer your questions after you go through the training and kind of just you'll oh, I think I see this. Is this what I think I see? And we'll be able to hop in and say, well, yeah, you got that one. Good for you. So before we hop off, let's talk about MicroStrategy real quick and then GSOL. These are
Yeah.
both proxies. MicroStrategy is a proxy to Bitcoin. We've been chatting it about a bunch over the last bunch of weeks. Mikey's done really well with options, and I've held MicroStrategy for a very long time, and I did really well with my buys. I didn't buy at the bottom, but we're very, very high from where our initial buys were, and I think we're going to go a good amount higher because when Bitcoin goes up, the likelihood of MicroStrategy going up is very high because MicroStrategy owns a whole lot of Bitcoin. So toss up that chart and what do we see there?
Yeah, so MicroStrategy, I mean, it's one of my favorites. I mean, like I said, I've made hundreds of percent on my options since October by playing them. Again, it's a risky strategy if you don't know what you're doing, but I'm able to do it with efficiency. So I'm going to show you the MicroStrategy chart. I'm going to show you what I'm seeing on the chart and where I think it might be headed here. So, um, you know, if this goes over your head, just stick with us in the coming weeks and we'll explain it to you. But this is the daily chart here for MicroStrategy. I'm going to clean it up a little bit here and get rid of some of these red lines here. So, what happened here is you'll see that we had that dip after the ETFs over here on your screen. Okay. We dropped in value for Bitcoin and MicroStrategy and everything because they sold the news of the Bitcoin ETF. We were actually making money leading up to the announcement, and then it sold off afterwards. Okay. So whenever you have a sell off, I always look for a new Elliott wave pattern. And again, if this goes over your head, it's just something that you will need to educate yourself on. So when we have a recent downturn, I start doing a new wave count. And if you've followed me in my groups, I'm showing this stuff, and it's just like sheet music to me. I'm pointing out the guitar chords and the guitar notes, but here we're talking about the stock market. So what do I see on my screen since we dropped after the ETFs? What I see is
I
wave
see a lot of
one.
green candles. That's what I see. And I see a lot of volume.
Yeah, and now to get even more specific than that, I see wave one up, two down, three up, the biggest wave, four down, and I believe that we're going into wave five now, where MicroStrategy might go over $2,000. Okay, and maybe we'll have a little lag short term, but if you go look at our videos from back in January, I was predicting wave four back then, and we went up. Okay, and right now we're in wave four of five, and I believe wave five will bring us to 1900, 2000, or higher for MicroStrategy. So when you're following along with us here, you're going to get this information. If you do the training with me, you're going to get a better understanding of this, and you're going to probably even see this stuff before I point it out to you. So
Yeah.
right now we have a very strong setup for MicroStrategy, and I think that we are about to go into wave five in the coming few weeks. And
Yeah.
what's happening in a few weeks, Mike? The Bitcoin halving.
Having
Okay. So
another check mark.
doesn't this logically make sense that we're about to do wave five leading up to the Bitcoin halving? It sure does to me. And
Yeah.
I have the charts to back it up.
So
So
it almost reminds me of like a slingshot. So the more we're pulling back, the more these indicators are lining up, the more we pull back, pull back, pull back. And then when we let this thing go and we're way back here, it's got a lot of power to it, right? So the more check marks that line up, the more trajectory this thing can go up fast. And this has happened in the past. We see it on the charts. So just to be clear, when we say it's a proxy, it means you don't have to have a Bitcoin wallet. You don't have to go out to create some exchange and go through any of that stuff. You literally just need a stock trading account and type in MSTR, which is MicroStrategy, and you can just buy the stock. Or you can buy one of the ETFs, similar. It just acts as a stock. You just put in IBIT or whatever ETF is you want to buy. And when Bitcoin goes up, the ETF, MicroStrategy, are more likely to go up as well. And MicroStrategy has significantly outperformed Bitcoin, which is a good segue into our next one, which is Solana. We've been very, very bullish on Solana, and we still are. There's a proxy that Mikey's been playing, and I just got in the other day called GSOL. So similar proxy, not the exact same, but when Solana goes up, there's a good chance this GSOL will go up. And GSOL, G was actually my nickname in high school. When Solana goes up, GSOL has gone up in like an even crazier trajectory. So we're getting close to the end here. But I want Mikey just to pop up a chart of GSOL to show us the trajectory and bring up a ruler showing us how much this thing actually has gone up in a short period of time in relation to Solana.
yeah, so I'm going to show you the chart here for GSOL. And I mean, I just want to remind people this is all about pattern recognition. And when I want to play a melody on the guitar, I have to recognize the pattern with my mind and my fingers. And just to reiterate that Bitcoin chart, like, pattern recognition is important. Like, if you've ever done an IQ test, I do well on those because of my pattern recognition skills. I'm not as good at reading books and getting higher marks than other people in classes, but I'm much better than most people at pattern recognition. And that's why when in January, leading up to the ETFs, I said, we're in wave 4 of 5 and we don't have the ETFs yet. We're going to get wave 5 when the ETFs are approved. And we did. Now I'm saying the same thing, pattern recognition. We're in wave 4 of 5 leading up to the halving, and we're going to get wave 5 before the halving. That's going to happen. So GSOL is part of this crypto bull run. Okay. And Grayscale is the same trust that people were using to buy Bitcoin during the pandemic, GBTC. And there's a Grayscale Chainlink fund we've been talking about, GLNK. Well, this is the Grayscale Solana Trust called GSOL, Grayscale Solana Trust. So if you don't want to open up a weird, scary crypto account with Coinbase or Kraken and stuff, and that sounds weird to you, maybe you just want to use your JP Morgan or your Royal Bank of Canada account to buy it on the regular stock exchange because you trust your bank or you trust your stock brokerage. Okay. And that's what this is. You can buy this just like a regular stock.
Yeah.
And so, let's go over to the charts here, GSOL. And we're going to do a couple of things here. So it's Grayscale Solana Trust, GSOL. So, look how much this has gone up in value here. Like back last year, this thing was worth $20 or $12 a share. And it went up to $575 a share. So if you bought this last year, you could be up so many percent. It's
Do the
crazy.
ruler. Do the ruler. See how much it actually is.
Well, so let's do this. So just from when it came out,
And
okay,
again, we're not going to get the bottom. We're not going to get the top. But look at this.
It's gone up 4,700% if you started buying this in 2023. Okay. So it's gone up astronomically, like it's gone up 4,000%. And if you zoom in a little more, just recently, I want to show you from January of this year, just until recently, this is how much it went up after the ETFs. So after the ETF announcement, it went up 418%. Okay, just since late January, 400.
That's 3 months.
Not even, not even. That's 2 months. So in the past 2 months, it's gone up over 400%.
Yeah.
Now let's go to the Solana chart. How much did Solana go up since late January? And I pointed this out to Mike because it's a big deal. Okay, so from late January until now, GSOL went up over 400%. Solana went up 167%. GSOL went up 2 or 3 times more than Solana. Okay, because there's a lot of rich people that don't trust crypto exchanges yet. So they're buying GSOL because they trust Grayscale and they trust the stock market. Okay.
So, and let me hop in here. We've seen this play out with MicroStrategy, with GBTC, Grayscale, with Bitcoin. Now we're just in the next thing, right? We're in. So Bitcoin is this. I mean, they're talking about a SOL ETF or a Bitcoin or a ETH ETF, but they're all doing similar things. So here we are. Like we're even more bullish on Solana than some of these other coins.
That's my top pick. That's my top pick is Solana.
Yeah, yeah. And I have the majority of my holdings in Solana as well. But if there's ways to further profit, like even having the 150% or whatever that was for Solana in 2 months, like that's phenomenal.
Great.
But
Great.
if there's a way to do 400% on a proxy to that, and it's easier to buy, let's go. So I got in yesterday. My limit order got hit. I was telling Mikey before we hopped on, I'm like, I was so close to getting, and this is where you put in your orders. And this is more advanced trading where you're putting in your limit orders and you're having your levels where you hope that it comes down and your order gets hit. And I was within, I think, like $2 of getting it like even further discounted. But I'm not kicking myself. I got in some, and this is where you kind of just layer in. You hit some and some that you don't hit. But I'm already in the money on that one because you're buying on the dips. So just remember though, like these things, they can get wild.
Yeah.
If you want to make 100% on your money in like a month, don't be surprised that it could potentially go down 40% in one day. But just you got to remember the narrative and the overall trend. Like how many check marks are there that lead us to believe that this thing will go up higher? And we believe there's a lot of good check marks that have been lining up. That's why we're in a lot. You know, we don't have a lot of cash sitting on the sidelines. Um, but it's nice to have some just in case there's these pullbacks and you can get at lower levels. So
I'm going to jump in again. I'm going to show one more thing. Again, this is the benefit of following us because I have very strong chart analysis here. So you'll notice that this is old chart analysis you see on the screen right now. I did this months ago. This is late 2023, early 2024. I labeled that we were in a pennant pattern. Okay, again, this is something I teach in the course in great detail. We were bouncing up and down like a pinball in this range. And when you have a bullish catalyst, such as the ETFs and Larry Fink, right? And the Bitcoin halving and everything else
yeah,
coming. What happened after? We flew up out of that pennant pattern. Okay. Now let me show you something else. Okay. History doesn't always repeat, but it often rhymes. Okay. So now I'm going to do some live chart analysis with you guys here. Look what we have here, guys. Mike already sees this probably before I'm drawing it. Right here, we have another pennant pattern in place here, folks. Okay. So right now, we're going through another pennant pattern. And, right now we're going to have Larry Fink and all these guys buying the dip, as am I, and as are a lot of people. And we have the halving event coming up, and they're going to lower rates this year, the Fed said. I think we're very likely to exit this pennant pattern to the upside and go way over $600 here. And we're currently at 397. Okay, so I think this is going to go way higher. I will warn you that when it goes down hard too. Look at that big red candle.
that's big, like really,
Okay.
really big.
So I'm not gonna,
560.
don't overinvest on this thing. It went down 40% in one day there. But remember,
Yeah.
it went up. Let's look at this here. It went up 456% before it dropped 40%. So keep that in mind. That's the way
Yeah.
this one works. It is considered more risky. I'm not telling people to buy it, and I'm not telling people to go put all their money in this. But me and Mike have some of our money in this, and the chart is set up to go a lot higher, in my opinion. Okay,
Oh,
so
yeah. So that's it for today. I appreciate you guys tuning in. Make sure that you like, make sure you subscribe. There's an option to turn notifications on. So when we drop more videos, it'll notify you. We're going to be doing more videos as well. We're going to toss in a couple extra videos probably next week and just share more. Like there's just so much going on. We can only pack so much into these recap episodes. And if you're not able to watch the full thing, come back and just continue on at another time. And yeah, we appreciate you. If you have any comments, questions, put them in the comments below and hop over to investlikemike.com and consider taking the course. Consider coming out to Mexico with us. We got some fun things that we'll do and we're going to enjoy some tacos together as well.
it'll be great.
Yeah. All right, guys. See you, Mikey. Have a good one. See ya. Bye.